You would think that Currys would have been the first against the wall faced with Amazon. Along with the bookshops, the record shops gone, then surely electrical retailing would be next. How is it that Currys are still going?
When I joined the business in 2018, that was a school of thought that this business wasn't going to last.
In 1884, Henry Curry started out building bicycles in Leicester.
And by the 1920s, Currys, as it became known, was selling radios and gramophones.
And a century later, it's still in business, selling consumer tech and electricals from laptops to vacuum cleaners.
And what we're going to try and find out today is that why Currys, when a lot of well-known retailers have crashed and burned, why Currys has managed to keep going all those years.
I'm Hannah Prevett, Associate Business Editor of The Sunday Times.
And I'm Dominic O'Connell, columnist at The Times and business correspondent for Times Radio.
From The Times and The Sunday Times.
This is The Business,
where we bring you the conversations we're having with business leaders.
And our business today is the very model of a modern retailer. Currys, we're going to be talking to the Chief Executive, Alex Baldock.
I'm really excited to be hearing from Alex, particularly this week, because it's such a big week for retail. We've had both Sainsbury's and M&S releasing their interim results. But just to remind ourselves a little bit about Alex himself. So he took over at Currys in 2018, scrapped the brand names of all the companies that had previously merged with it. So it's goodbye to PC World, Dixon's, Carphone Warehouse, and he just brought everything together under the Currys name. That is, of course, except for the Nordic branch of the business, because lest we forget, 40% of Currys' income comes from the Elkjøp brands, which trades in Denmark, Sweden, Norway, and Finland.
Yeah, we always think of Currys as just being a UK operation, but it's far from that. It got through the pandemic. It's fought off various takeover approaches this year, one from Elliott, a hedge fund, and one from JD.com, which is a Chinese retailer. And it's one of the few retailers really that's found a way to mix online sales with bricks and mortar, like perhaps Next. John Lewis has done a bit of that. It's still got around 300 stores in the UK and Ireland, employs about 15,000 people in the UK, and they're doing pretty well at the moment. Pre-tax profits were up 37% in their recent financial results. Group sales over 8 billion quid.
But like lots of retailers, he'll be wondering what's coming around the corner in the next budget that we're getting, of course, later this month. It's a critical moment in the economy. Lots of retailers have been talking this week about depressed consumer sentiment, essentially. And Alex was, of course, very outspoken about the last budget and, in his words, the growth-sapping tax burden placed upon retailers. And, of course, this week, Rachel Reeves said, we all heard her say, we have to do our bit to build a stronger economy. But what does that mean for business and retail in particular?
Well, exactly. So there's quite a lot to talk about.
Welcome, Alex Baldock. Thank you so much for joining us on the podcast today. Do you like our studio?
It's lovely.
Well, thank you for making the trip. I would like to start by listening to a bit more of your backstory. So how you ended up in the world of retail, because I think business was something that was very much discussed around the kitchen table, wasn't it?
Around the kitchen table and around everywhere else as well. Yeah, I kind of grew up absorbing it. My dad, I should say, by the way, that I've had an incredibly privileged and fortunate upbringing. My dad emphatically did not. I mean, he grew up a working class boy in South London, left the school at 15 to join the army, and then pounded the streets door to door with P&G, selling soap to small independent grocers in Whitley Bay, and then ended up running Guinness Brewing a while later. So business was in the air, was in the conversation. The house was full of business people. The house was full of business chat. It's maybe a failure of imagination on my part that it's never really occurred to me to do anything else.
So just give us a kind of potted history, if you like, of your kind of career trajectory, because you started, your very first job, I believe, was at Waterstones, the bookseller. That's right, isn't it? Stacking
shelves at Waterstones, Newbury, yeah. I'd love to say that sort of engendered a lifelong passion for retail, and my career since has been a straight line from that point. I don't think that's true. I think it was just after some money. My dad very firmly believed that I should work for my money, and if it wasn't retail, it was construction sites when I was a teenager. So yeah, but I can honestly say that my very first job was in retail.
Could you talk about growing up with business being talked about around the kitchen table, seeing business people? How though do you plot thinking, okay, well, I'd like to do what they're doing? How do you decide to get there and do what they were doing?
It just seemed a very exciting way to spend your time, and a line of work that taps every part of you. And I still believe that. I feel incredibly fortunate to be working in business. It's stretching intellectually, it's stretching emotionally. You have to deal with all sorts of different people and all sorts of different issues. Any given day can be everything from scratching your head over some big strategic conundrum through to solving some personal disagreement between two colleagues. You have to stretch your EQ as well as your IQ. You have to know when to be an orchestrator and when to be a mechanic, and when to go up and down between those two. Yesterday, I spent my day tramping around stores and watching and seeing our preparations for peak trading, because we're getting into the most exciting part of the year for a retailer. And talking to colleagues about what we're doing to help them and to give them the tools and the training and the deals and everything else that they need to be successful this peak. And later this afternoon, I have a very big picture strategic conundrum to debate with my CFO and a bunch of other people. So it's an incredibly exciting, varied life.
Your first kind of big job, at least the one where you sort of came to prominence, was working for the Barclay Brothers, Shops Direct and Very.
Well, I got a call from Ian Livingston, who was the chairman of Dixon's Carphone, as then was, and said, look, you seem to like full-throated transformation challenges. I've got one for you. And I knew Dixon's Carphone. I knew Currys from the outside, because Very competed against Dixon's Carphone. I had a very keen appreciation of the business's strengths. It's not much fun competing against a big market leader with the heft and with the know-how as a bricks and mortar retailer that Currys had. But I also had some ideas on what we might do differently with the business, and so it's proved.
And so give us a flavour of the kind of size and scale of Currys today. Because as you say, it's changed considerably, hasn't it, in the last few years?
Yeah, it's a big old beast. So we've got 24,000 colleagues at Currys, and we're the market leader, not just in the UK, but 40% of the business is across the Nordics, where we're also the market leader in countries like Denmark and Norway and Sweden and Finland. We serve 80% of UK households, so we help we help them with all of their technology needs, everything from selling mobile phones to laptops to washing machines to hair straighteners and LED face masks, which, by the way, is the coming thing for this Christmas.
Is the LED face mask going to be bigger than the air fryer this Christmas?
Well, the air fryer is big enough, but yes, in short, the LED face mask is. By the way, this is a really exciting thing in itself. The electrification of things is itself an opportunity for a business like ours, because customers, instead of spending money on face cream, they're spending money on kit, and stuff that has a plug attached to it is stuff that we sell.
Well, I was going to say, because standing back from it, you would think that Currys would have been the first against the wall, faced with Amazon. Along with the bookshops, the record shops gone, then surely electrical retailing would be next. How is it that Currys are still going in the face of Amazon?
Well, a lot of people did think that, including Amazon, if you go back a while.
Yeah.
So, if you wind back to when I joined the business in 2018, that was a school of thought that this business wasn't going to last. It was a very good bricks and mortar retailer. It was always that. But the market was moving online. The Carphone deal had gone sour, and the business appeared to have lost confidence in its core and was branching off into all sorts of barely related areas, like trying to become a software developer or cracking the US market or the large enterprise B2B market or the luxury retail market, things that we had no business being in and got out of pretty sharply afterwards. So it was almost the business had lost a bit of confidence in what we were about. And also we were, you have to face the brutal truth in business, I believe. And the brutal truth was that this is a discretionary, big ticket, and therefore cyclical category where we sell infrequently purchased products that are available at many other retailers, and therefore customers are incentivized and able to shop around every time. And loyalty is pretty hard to engender, and it's got quite a high cost to serve. And therefore, if you're not careful, your profits and cash flow can trend downwards when the cycle turns against you, and there's not a lot you can do about it. So that's the downside of the business that we're in. But I and others believed that there was a secure and lucrative future for Currys, and that's, as always, it needs to start with the customer. And the customer finds what we sell, very exciting, not least LED face masks, but pretty confusing and expensive. And they need help. They need help not just choosing the right laptop or mobile phone or TV, but they also need help getting the most out of it, affording it because it's expensive, getting it started because it's confusing, giving it longer life because, again, it's expensive and people want it to last for longer, and then getting the most out of it. And that's where services come in. So if you want to encapsulate our strategy in a sentence, it was taking a really good bricks and mortar retailer and turning it into a world-class omnichannel retailer and services provider.
So omni-channel is a word that people use. Basically, you mean selling online and selling bricks and mortar.
Yes, it's an unlovely phrase, but it's an important concept because, it speaks to something that we had going for us, that customers in our space prefer to shop in a mix of online and stores. Now, we didn't have much of an online business, less than 10%. Online a few years ago, which is why Amazon were licking their lips at their prospects of competing against us. But we've built, the team have done an amazing job at building a really strong digital offer to complement our bricks and mortar offer. And we're near enough 50-50 online and stores now. So we've dealt with that and we've kept our market leadership while riding the channel shift, if you like, towards online. But then what we've done is we've built out the services that customers value and that we are better able to provide than competitors, and which are lucrative as well as in demand. And we can get into the services I'm talking about, whether it's credit or the 12 million repair customers that we've got in the business, where purpose and profit go hand in hand. But no doubt we can get to that.
Yeah. Well, where does the split between online and bricks and mortars end? Are you now at a defensible 300 stores in the UK and that's where it's going to stop? Or if we have this interview in 5 years' time, are there only going to be 100 Curry stores in the UK?
The honest answer is I don't know. And so we're getting ourselves prepared for different ways in which the future might pan out. I think lots of people have been made to look quite foolish by making sort of confident pronouncements on where the future's headed and end up falling a bit flat on their face. So we don't do much of that. We just take different scenarios and make sure that we're ready for different ones. Now, you asked me what I believe. I strongly believe that stores will be at the heart of the Currys offer in 5-10 years' time. Simply because of what, I'm not sure that's true of every category, but I think it's true of ours. You come back to what we sell. It's expensive and it's confusing. Nobody is going to spend £600 on a TV without seeing the picture for themselves and hearing the sound. People find the decision on which laptop to buy pretty confusing, and they value the expert advice from an independent colleague, one of ours who they trust, because we're the last people standing when it comes to giving independent, trusted face-to-face advice. And one of the reasons that we invest so much time and money and effort into having capable as well as committed colleagues in the business isn't just because we're lovely people, although obviously we are. It's because it's a commercial imperative. It's very difficult for the experience of the customer to be better than that of the colleague in our business. And that's why it makes sense for us to work really hard to make sure our people want to be there and know what they're talking about. And, we've been rewarded by being in the top 2 or 3% of companies worldwide in colleague engagement. We've got very low levels of attrition, and the customer satisfaction is 20 points up on where it was a few years ago, and that's because of the great experience that the colleagues give them.
Just as a follow-up on the question on stores, is it harder to make them work financially than it was 10 years ago?
Much. So it is more expensive and has become more expensive recently. Perhaps we'll get on to talk about budgets and the like a little bit later. But yes, I mean, the cost of employing people is significantly higher. Rates are a big burden on retailers with a big bricks and mortar presence, and those pressures have not alleviated. And meanwhile, if you're a business like us, you've got to maintain a big bricks and mortar estate at the same time as building out at scale a digital business and having the supply chain and service operations to fulfill both. That's a high cost to serve model in a low margin business, which is why you have to be pretty sharp to prosper in our line of work. I mean, we make £1.80 of profit for every £100 worth of tech that we sell, and so these are quite fine margins we play with.
Mm-hmm. So we've talked about a big strategic thing, online versus bricks and mortar. What about day-to-day management? What's your style like? Are you a horrible boss?
Well, you'd have to ask other people. I mean, I hope not. I mean,
you talked about the need to be brutal at times. That's clearly something that all managers need, don't they? You have to realise when you're flogging a dead horse and to get rid of it.
I think you need to face the brutal truth. I don't think you need to be brutal in manner, and I don't think it helps if you are. Look, if you ask what I'm like, I mean, it's really for others to say, but what I've been told, I hope I bring a certain strategic clarity to things, because it's important that a leader is ultimately responsible for making sure that a clear direction is set and followed. I hope I'm a disciplined operator, and because large-scale, complex businesses need that. But ultimately, you need to get a top team around you, and they need to follow you where you want to go. And if they don't want to be there and they don't want to follow you, you're not going to be very successful. One of the things I have learned, sometimes the hard way, in business, is you don't get anything done on your own. My dad tried to teach me that a while back, but as with so many of these things, and as I'm finding with my own children, you kind of need to experience it for yourself, and learn the hard way. And coming out of consulting, which in many ways was quite a good grounding for business, one thing it doesn't teach you anything about at all is leading people. And and as I say, I've learned over time that you need to have top people around you, and you need them to believe in what they're doing. You need them to cohere as a group, and they need to want to go where you're going. Otherwise, it doesn't work very well.
And so moving to a kind of broader group of stakeholders, if you like, I'd like to talk a little bit about takeover bids. So last year, I think it was, you turned down an approach by Elliott Advisors, the US investment management firm. And then what about this year? Because we've heard JD.com has been very interested in Currys. So what do you have to say about potential bids?
I can honestly look you in the eye and tell you it's not something I spend an enormous amount of my time obsessing about. Simply because we've got. I mean, our days are pretty full as they are. We've got a lot to do, and we've come a long way as a business, but there's still a long way to go. And second, ultimately, it's not my call. I answer to shareholders who own the business, and ultimately, if they're happy selling to other people to own the business, that's up to them. My job is to make it as expensive as possible for any buyer to take us over.
Do you think the relative undervaluation of the UK market plays a part? Because we've seen so many UK companies taken out over the past couple of years. If I was a Chinese company looking for an attractive way into Europe, and I happened to be in the online retail game and bricks and mortars as well, wow, I'd buy a UK retailer. I'd get it for nothing.
Yeah, of course. In many ways, you could argue being a listed UK equity is running up a down escalator, right? Because there are net outflows from UK equities every month. So you have to work quite hard to get the kind of share price appreciation that my team have delivered. And I think we're over double the share price of where we were when Elliott tried to take us over. So
you have to thank Elliott actually for helping your share price along.
It was flattering to be approached by people who clearly know a good business when they see one, but they haven't. They're not the ones who've done the work. It's my colleagues who've done the work to transform the fortunes of Currys and build a much stronger business that we enjoy today. But to answer your question, I think sometimes this is a bit overblown. If you look at the difference in valuation between UK and US equity markets, for example, most of it is accounted for by mix and by underlying performance. There is a valuation gap because the liquidity pools in the US are deeper. There's more cash. There are more investors, and there are more investors to go after. And of course, there is less money flowing into the UK now than there was, and it would be helpful were that reversed.
You referred earlier to the budget and some of the headwinds that retail is facing more broadly. M&S delivered their interim results earlier this week, and Stuart Matchin talks about a kind of consumer sentiment. And he said that Rachel Reeves' speech earlier in the week might have worked to calm the markets, but it certainly hadn't calmed customers. How are your customers feeling at the moment?
So I'd start with, our customers are pretty representative, right? Because we serve 80% of UK households. So we're talking about the whole of the country here when we talk about our customers, first of all. And consumer confidence is bumpy. You could take a more optimistic view, and you could look at the fact that probably interest rates and inflation have peaked. Employment, at least how conventionally defined, remains quite high. Retained savings are in reasonable shape, and our market has not been enormously declining, and we're, as I say, quite a cyclical market, the technology market. So we're often first in, first out of a downturn. So you could take that more optimistic view, but look, consumer confidence is still low by historical standards, and it isn't helped with a real and an expected burden of taxation, because the more you tax people, the less they've got to save and invest, spend and invest rather, and that feeds through into consumer demand. And there is a bit of a sense of people waiting to see what's coming in November. That said, we're trading okay.
Mm-hmm. So you got hit last time with the national insurance increases, which you were very vocal about, but you think you might get hit this time as well if there's an increase in general income taxation, because there'll be fewer people coming through your doors and they'll have less to spend.
I sincerely hope that we're not hit again. And you're right, Dominic, to point to two ways in which that could happen. I mean, the first is making it harder, riskier, and more expensive for us to employ people, which is what happened at the last budget, and the inevitable consequences of that right the way across retail and other high-employing engine room sectors of the economy is that there are fewer jobs created, and it's depressing of hiring, it's depressing of pay, it's depressing of career prospects, it reduces investment, and it fuels inflation and makes growth to deteriorate. So in a fine margin business like retail, where people like us, even successful retailers like Currys, make £1.70, £1.80 of profit for every £100 of stuff that we sell, if you increase burdens on the employer, there's nowhere else for it to go other than higher prices, lower investment, fewer jobs, and lower growth. So an already overburdened sector like retail, which pays more than 50% more than its fair share of taxation, that's already been disproportionately hit in the previous budget, it would be, to put it politely, self-defeating were that to happen again. But you're pointing to a different way that we could hit, which is more on the demand side. And sure, if you're largely a discretionary big ticket retailer like Currys, if the consumer has less money to spend, the money is likelier to go to groceries than it is to upgrading their TV. That's inevitably true. So we're hoping that the historic post-war highs of taxation that we already staggering under as a country is not added to in the coming budget, but we'll see.
How much have the changes that were made in last year's budget impacted you by? So Stuart was saying yesterday that it's a £50 million additional cost, including national insurance contributions, but also EPR, the extended producer responsibility packaging tax. Have you put a number on it?
Yeah, we started this new financial year at minus £32 million. And given that we made £162 million PBT profit before tax last year, that's already quite a big hurdle to get over, and that's the NI increases, the jobs tax, as well as in the national living wage increases, and a bit of an impact from things like EPR, and potentially an impact from business rates as well. Although I'm hopeful that sanity will prevail on that front in the coming budget. So there was already quite a big hurdle to get over, but we're working hard to do it.
And that's the next thing I was going to ask you about, actually, was business rates. And I was with a big retailer yesterday, and I understand Rachel Reeves has been meeting with many of you retailers to talk about business rates and what might be able to be done there. How are you feeling? Are you hopeful?
I am hopeful, because I and others have been making the case quite strongly, and it's a very strong case. If you want more people employed, then where else are people going to be employed other than the really good, flexible, entry-level, good prospects jobs that retail provides to give people their first step on the career ladder, and to help people back into the world of work if they're on benefits, topically enough, or if they're older people or carers or students who want a bit of part-time work. So retail offers these opportunities in enormous numbers. 5.7 million people, getting on for 20% of the private sector workforce, are employed in retail and the retail supply chain. So and rates are one of the big dampeners on our ability to employ more people. We want to help the government with its aim to get Britain working and get Britain back to growth. We can't do it if we're excessively burdened, and we can't open more stores, and it will threaten the viability of some existing stores if the rates bill increases significantly again. Now, what are we specifically asking for? There was a mooted new multiplier for £500,000 and above retail stores, which we are arguing hard should not apply to retailers. No retailer should pay any more rates. Retailers already pay more than 50% more than their fair share of business taxation. We pay 20% of all business rates, despite being 5% of the economy. The sector won't take any more. As I say, it has nowhere else to go other than fewer stores, more gaps in the high street, higher prices, lower investment, fewer jobs, and lower growth. So I am hopeful the government will listen, and let's see.
Just counter to that, though, isn't it a bit rich for retailers and business in general to complain about Rachel Reeves as raising tax, when the reason she's raising tax is that the government spent an awful lot during the pandemic, and a lot of it on business, furlough support, CBILS, all kinds of things, business rate holidays actually as well. So when she's looking for money, she's going to look to you as the biggest beneficiary of government spending during the pandemic. Isn't that's kind of a night follows day thing, isn't it?
I don't think so, actually, Dominic. I mean, for a start, Currys is not alone in having repaid all of our furlough money, which we did in full. So we don't feel we owe anything to owe anything on that count. And I think the pandemic was 5 years ago. I think we are where we are now. And the question is, what outcome do you want? I mean, if you want a society where we're having economic growth, which basically means some people can have a better standard of living without taking it away from somebody else. If you want more employment, if you want to give more people the dignity and the purpose and the sense of fulfillment that work provides, then it's going to be businesses like retail, the engine room, high employment sectors, not just us, it's leisure, hospitality, construction as well, but it's going to be sectors like retail who have to shoulder that. And we want to, and we can. But we need to be helped to do it. We need to be enlisted to do it. I mean, business can be an incredibly powerful force for social good, I believe, but you need to harness it rather than hinder it.
Are you disappointed by Rachel Reeves?
Look, I'm not going to get into personalities. I'm not sure that's helpful. My job is to make sure that Currys is successful, whoever's in office, and whoever's in office, we're going to argue for the things that we believe are going to be good for the millions of people who shop with us and the thousands of people who work there.
I saw a bit more the abrupt change in tone, wasn't it? She said she was going to be incredibly business friendly, the most business friendly government ever, and then literally within 3 weeks of taking office, there were tax changes that were deliberately about taxing employment, increases in employers' national insurance contributions. It was a very abrupt change in message. I'm
going to resolutely play the ball here, Dominic, rather than the person. Part of me is sympathetic to. I think politics is a much harder, more complex game where the rules of engagement are much more complicated, and what success looks like is more difficult, and it's extremely difficult to marshal people behind a set of coherent goals. The stakeholders. I mean, I'm glad I'm not a politician. I'm just a simple business person. But simple business people like me are in a position to help. I mean, because Rachel Reeves herself has said that growth does not come from government. Growth is driven by private businesses, and that is true. And the 28 million people who work in private businesses in the UK pay for everything else. And so that it makes sense to enlist us to the social ends of growth and employment. And it would be, and we've got plenty of ideas on how best to do so. That's not going to be best achieved by burdening us and making it harder, riskier, and more expensive for us to employ people and to invest.
So turning now to Christmas, because you referred to it earlier in our chat today as one of the busiest times, or the busiest time of year. How are you feeling going into the Christmas period? Because given the late budget, I mean, is that going to have a knock-on impact potentially on sales? Do you think you'll see fewer Christmas sales earlier in the period than usual? Yeah, how's that looking for you?
So I divorce two things. The first is the environment. We've talked about the policy environment. We've talked about shaky and patchy consumer confidence. So be it. The environment's not the best. But Currys has had plenty of practice in the past 4 or 5 years at running up or down escalator, and we've got quite used to taking our fate into our own hands, and that's what we'll do this Christmas. I was saying this to a bunch of colleagues in some stores in the just east of London yesterday. I'm feeling more confident about this peak trading period, as we call it, this Christmas, than I have about any before. We're in pretty good shape. We've got a lot of, which we can get into if you like. We've got a lot of fantastic deals on offer.
Typically, what proportion of your sales and what proportion of your profits come at Christmas?
Yeah, we don't quite break that out. We're a listed company, subject to various constraints on what we can say, as you know. But it's a quarter of the year. It's more than that in sales and profits.
And disproportionately profits. profits, I guess. You sell more full price items at Christmas than at other times of the year.
We do, although of course the industry has introduced Black Friday and the period around it, which, if I was running UK retail PLC rather than Currys, you might wonder at the wisdom of introducing a discounted period into a time of year when previously everything was sold at top price. But it's established now. Black Friday is there, and it's up to people like us to make sure that we're delighting our customers and making some money doing it. Now, happily, the good thing, coming back to your question on Christmas, the good thing about being number one in the market, the good thing about being market leader, is we carry most heft with our suppliers, which means that if we know what we're doing, we should be able to provide the best deals for our customers, and we're confident of being able to do that this Christmas.
So tell us what's the big seller's going to be this Christmas. Everyone goes on this morning at this time of year and gives their toy predictions, etc. What are your predictions? What's going to do well? You've already shouted out the LED face mask, although I feel like you should have brought us some. We could have sat around doing this interview wearing them. That would have been very entertaining.
Well, we'd look like ice hockey goalies if we did. They're slightly disconcerting to look at, but again, a fabulous product, and where we've got an unmatched roster that I'd encourage you to tuck into over Christmas. Look, what's going to be big? Air fryers haven't, that gift keeps on giving for us as well as for consumers. And now people are now upgrading or even going into their second air fryer.
How many do you have?
We've got 2 in our household, but I'm being self-critical here. Maybe there's room for more. And
I don't have one. Maybe I need to get myself down to
You
Currys.
need to get yourself a dual zone as well, because they're really taking off. So there's that.
Right.
Hair care is huge for us at Christmas. For example, the Dyson Air Straight hair straightener, which we've got on at an absurd £150 off for this Christmas, which I'd encourage you to tuck into. So that's hair care is going to be big. But one of the big trends that we're seeing at the moment is AI, and this is a big trend for us this Christmas, because AI computing and AI mobile is giving customers a really good reason to upgrade their mobile handset and to buy a new laptop.
It might be a short-term sales boost. Is it a long-term threat if I'm going onto AI and they say, don't buy it at Currys? I don't need to see the salesman at Currys. I can actually get some AI advice and buy it online. Yeah,
it's a really interesting question, that, and something that we're very alive to, because there are AI agents emerging now, which, if you wanted to take a glass half empty view, carry a threat of disintermediation for a retailer like Currys, or at least taking part of our role, because you could see a future where you ask an AI agent, which laptop should I get for my kid who's going back to university from such and such a budget, such and such a usage, and where I can get delivery reliably tomorrow morning. So you could look at it as a threat. We look, as you might expect, we look at it a bit differently. The whole field, for example, of search engine optimization is now rapidly transforming into search generative optimization. SEO is becoming SGO. So we're getting better at making sure that as these agents become more used, then Currys features more highly in the responses. That's one response. More broadly, this is an area where we're looking at developing our own, and we've already made some quite big strides at deploying machine learning and AI in the business. That goes back years in areas like pricing and managing your stock and the like. But now we're deploying Gen AI in earnest in our after sales customer experience, and in time you can expect to see that appear on the Currys website, as well as a Currys agent can help you choose the right laptop or the right mobile phone for you, and then customers online can start to get some of the benefits they get today by going into a Currys store, where it's the expert colleague that provides that advice, and in future that can be more easily automated. So, as with so many things, we see opportunity as well as risk here.
And just finally, on that theme of kind of threat, I'd like to just talk quickly about cyber, because again, in the M&S results this week, we saw M&S's profits almost entirely wiped out as a result of the cyber attack that they encountered earlier this year. Are you confident that you won't fall victim to a similar attack? Have you increased your spending on cyber since the M&S hack?
I'm confident that this is something that we're very alert to, and that we're investing suitably heavily behind. We've got a lot of talent internally and in our partners facing into this risk. I mean, you'd be a fool if you weren't, or M&S or co-op or notwithstanding. I mean, you'd be a fool if you weren't all over this risk anyway. And I hope that we are. And this is we're doing all of the usual things, which you'll forgive me if I don't go into massive detail on, about protecting ourselves against something going wrong and dealing with it should it materialize. But this is an area of massive focus for us. But I'm confident we're working hard on it, and we're partnered with the right people, and we're investing correctly behind it.
One big retailer said to me yesterday, sorry, just to finish on this, who will remain nameless, he said, we all believe it's a case of when, not if. Do you subscribe to that view?
Well, we're under attack every day, as is anybody else. I mean, who operates at our kind of scale. So, I mean, that's nothing new.
What sort of attacks?
Well, denial of service and the likes. So there's all everyone's trying their luck all the time at this, and you just need to make sure that you've built high walls and that you keep a very close eye on the inner inside those walls to see if they're breached, that you can respond quickly. So look, you'd be a fool if you said there's no risk and that we're 100% confident nothing bad is ever going to happen. That's not how it works. But you can massively reduce the probability of that risk coming to pass, and you can reduce the severity of it should it come to pass, and that's what we're working hard to do.
Well, listen, Christmas is coming, so we should let you get on with preparing for it. But thanks very much, Alex Baldock, Chief Executive of Currys, for being our guest today.
My pleasure.
Well, that was Alex Baldock, and he's always super interesting. He is super, what's the word? He's totally on top of it, isn't he? I thought he was very interesting on the balance between online and bricks and mortar, and preparing for AI, having a Currys AI agent to try and rather having Currys do it rather than having some chat GPT agent telling you to buy your laptop at Amazon instead. He sees that threat and wants to get the Currys AI doing that for you rather than someone else.
Absolutely. I think we've spoken to him before, and he's always seemed to be very ahead of the curve when it comes to AI and how it can be deployed throughout Currys, as well as, through the technology that they sell. I think we've spoken to him before about, particularly in customer service, and how they see really great kind of customer satisfaction scores through their AI agents, and sometimes better scores than through humans, which kind of runs contrary to popular belief. And
with the budget coming up in a couple of weeks, he also seemed pretty confident that what's called the multiplier, which would have put up business rates for retailers in particular, reading between the lines there, I think he's pretty confident that won't happen in the budget.
Yeah, absolutely. Some welcome news, perhaps, a bit of welcome respite.
Although he's also quite worried if Rachel Reeves does put up income tax, as everyone thinks she will, what will that do to consumer demand for his kind of products just ahead of his crucial trading period, Christmas?
Yeah, of course. And the other thing I found fascinating was cyber. So I'm a bit of a dork when it comes to this stuff, as we all know. But right at the end there, asking him about cyber and him saying they're under attack every day.
Yeah.
I think hearing retailers put it in such stark terms, it's what we suspect, but I think that was quite striking.
What I thought was interesting, what he said there was that the first thing he said is we have very good internal people. So this idea, I think a lot of businesses think, well, we can outsource our cyber protection to an external consultancy. He didn't talk about that to start off with. He talked about their internal people. So they clearly have a big internal expertise that makes them, I think, a lot more nimble and probably a bit more confident about their ability to do stuff when they are under attack.
Absolutely. And that actually chimes with something. So in the M&S call yesterday, they said, so obviously they had lost, I think it was around 324 million pounds in lost sales across the business. But they also, what they described as below the line, 102 million pounds worth of additional costs. And that was mainly spent on security professionals and consultants coming in to mop up the errors that were made. And they said that all of their IT people prior to that were offshore. And these were deploying consultants in the UK onshore.
Well, I wonder if retailers like M&S might in the future think, actually, rather than building the next warehouse, we need to build a division that just looks after our own IT security internally. So we don't have to run off and pay top dollar when we get attacked.
Yeah, absolutely. So that kind of sovereign technology thing, again, comes into play. Really interesting.
What are you writing about this week?
What am I writing about this week? I'm actually writing about cyber.
Just as well we had these things too.
Exactly. I'm really glad we got that in there at the end. But of course, I'm often looking at things from a kind of entrepreneur and fast growth business perspective. And obviously, the cyber attack wiped out M&S's profits, which is bad, but they will recover. But for a growing company, that kind of attack, it'll be game over.
Could be existential.
Exactly. So, and speaking to some of the entrepreneurs kind of on the front line about some of their experiences and the really kind of personal personal impact of undergoing an attack like that. But how about you?
I'm going to write about Novo Nordisk, the Danish company, which started the whole fat jabs thing off with Wegovy and Ozempic, the treatment for diabetes. Lost a lot of ground recently, and I'm looking at a really interesting takeover battle it's fighting in America over a company called Metsera, which is a very new kid on the block with these fat jabs, but it's got some of the most exciting treatments. But Pfizer, the big US drugs company, which hasn't had any luck with fat jabs, it's trying to buy it. So there's a big tussle going on there. Great court case, lots of wonderful court documents, and I'm going to write about that this weekend.
Excellent. Well, perhaps that can form the basis for a future episode on fat jabs, Dominic.
Exactly. I'm Dominic O'Connell.
And I'm Hannah Prevett.
And this is The Business. Thanks for being with us. It's a brand new thing for us, not that brand new anymore, actually. We really want to hear from you, though, about what we've done so far and what we should be doing next. You can email us at thebusiness@thetimes.com. We do want to know what you think and what our next subjects should be.
And don't forget, if you're listening to us right now, you can also catch this show on YouTube. We'll be adding more to our channel as the show grows.
And don't forget to subscribe to the podcast on YouTube, as Hannah said, or on your podcast app, so that every new episode drops straight into your feed as soon as we publish. We'll be back with you next week. Bye until then.
See you then.